All right. Good evening. I'm so glad you were able to make the time to be with us. We have assembled a really strong panel of experts tonight that are here to uh, support the support we're giving you through our Roadmap to Recovery program on some of the deadlines and decisions that you are facing at the second anniversary of having your home damaged or destroyed in a wildfire. Because we are a small organization with a big mission, we are doing a combination tonight of both California and Colorado. And we have 3 Colorado experts with us tonight and 2 California experts. We have 2 lawyers, a lawyer from each of the 2 states, policyholder lawyers. We have a regulator, somebody from the state regulatory agency in each of the 2 states. And then we have a Colorado fire survivor to share some of his homegrown wisdom that he can share. So I'm going to share my screen now. We have a slide deck that we are going to go through. And here we go. So I think given that you are all folks who were impacted 2 years ago, chances are pretty good that you've been through a number of our programs already. So I'm going to be moving pretty quickly through the slides tonight, and the slides will be available for you at a later date. We'll get them up there tomorrow. I'm pretty sure, so that if you feel like you missed anything, it'll be right there for you. UP is a 501c3 nonprofit. We have been doing this work since 1991, helping people understand their rights as somebody who has bought insurance, and then understand how the claim process works after a disaster, and then get through the process as relatively painlessly as possible, solving problems along the way. Our team consists of our professional staff, our government, business, and nonprofit partners, our volunteers, which include people like Kevin Mott, who's with us tonight, who's experienced his own loss and has some wisdom to share, and then consumer-oriented professionals that would include lawyers. So we have 2 of those tonight. And then our government partners, Tracy Garceau and Tony Signorelli, are really special people. They are working after hours as in a spirit of collaboration and to help you, and they are pretty great, and we appreciate both of them very much. We're here through our Roadmap to Recovery program, and through our Advocacy and Action program, we work to solve problems that we can't solve on the ground. So, for example, the legislation that has extended deadlines for in the past or in the future, that's some of the work that we do. And we know there is some frustration out there in terms of the newly enacted law in Colorado. We did our best. We've never been able to get any laws retroactive ever. So we just keep moving forward the best we can. So that's your California library that's available to you 24/7, your Colorado library. We try to keep them up to date as best we can. A reminder that we are here to give you information and general guidance, not legal advice. And if you have a specific legal question, we recommend you consult an experienced attorney. We're not creating a professional client relationship with you. We're just here to try to help you. Coming up, we will be doing a program on wildfire prepared resilient rebuilding, where we will have experts talking about, I'm sorry, that's actually passed. I apologize. This is a little mistake there. Okay, so here are our panelists for tonight. Tony, Tracy, Nelson, Kevin, and Dan, and myself, Amy Bach. Tony has been helping out with our programs for years. He is the head of the Consumer Services Bureau that processes requests for assistance, complaints. His division also does audits of insurance company claim handling. And Tony has been part of almost every single legislative improvement that we have managed to get through in California. Tony has been either authored it or helped shepherd it through. He's very well respected in many circles. So Tony, thank you so much for being with us. We also have another star, Dan Veroff, California policyholder lawyer, member of the UP Board of Directors, has been our go-to guy on underinsurance legal issues in California now for a number of years. And thank you so much, Dan, for being with us. He is with the Merlin Law Group. They actually also have an office in Denver, I believe. Is that right, Dan?
Yes.
Okay. And Dan's partner was one of the lawyers that helped out at our last pro bono legal help clinic. We also have Tracy Garceau. She's like Tony's counterpart in Colorado, is a lead insurance analyst with the Consumer Services Division. Tracy has just been a phenomenal help, and I know she's been working very closely with the commissioner since she worked on these troublesome fires, and she's been just a great help to us in the last couple of years. So thank you, Tracy. And also another superstar of the policyholder bar, Nelson Waneka, rhymes with harmonica. Nelson also volunteered at our last pro bono legal help clinic, actually several of them. And Nelson is representing quite a few clients in Colorado with wildfire claims. And Nelson, your expertise is so valuable, and we really appreciate it. And then finally, we don't have a slide for him, but Kevin Mott is with us, and you will hear from him a little later in the program about his experience with his ALE. So before we get into the meat, I'd like to remind everyone that we know that the material that we present is dense. We know that it is emotional. We know that a lot of it is pretty dry. And all we can do is try to make it clear as we can, and to help you absorb it. And so to do that, we periodically show one of these slides. And when you see one of these slides, we encourage you to consciously relax your shoulders. And I will stop talking for a minute so that you can process the information that's come your way already. We do have a Q&A bar, which you should see at the bottom of your Zoom screen. And we did get some questions in advance, and we will be answering those. But if you do have questions, you can type them into the Q&A, and our panelists will type in some answers as we go. So we're going to briefly cover tonight some of the deadlines and decisions that you may be facing at the 2-year anniversary of your loss. We will go through the California and Colorado rules. We will give you a few refresher reminders about the approach that we recommend you take to staying on track and problem solving. And then we will talk a little bit about loss of use and ALE funds. We'll answer the questions that were pre-submitted and give you a little bit of a couple of suggestions for marking the anniversary, which is always emotional for a lot of people. The 1-year anniversary is usually very emotional. The 2-year brings its own challenges where people feel like, why am I still struggling with some of these issues? Shouldn't these things be resolved? We did get somebody asking if they're in the right group that you're with from Oregon. We do not have any Oregon experts on tonight. You're welcome to listen, but we are aiming tonight's program at California and Colorado. A lot of the material we'll be covering, though, is kind of generic, so you're really welcome to stay with us. So we, as I said, we, having been doing this work for so long, we know that disaster anniversaries tend to bring up emotions and renewed anxiety. Just like all problems that can be overwhelming, the best advice we can give is to break things into pieces and try to tackle one thing at a time. This is a good time to request a complete claim summary from your insurer of all the amounts that they've paid to date, and then work to correct any math errors in payments or ways that the adjuster may have allocated some of the payouts. And as you know, if you've been part of our programs in the past, one of the most important bits of advice we give is to stay as organized as you can with your receipts and your journal of where you're writing down who said what when, and then to be continuing to communicate with your insurer in writing, particularly to get confirmation about any policy deadlines that may be coming up at the 2-year anniversary. Tracy and or Nelson, I know in California, an insurer is required to notify the policyholder of deadlines that may be approaching. Is that the case in Colorado as well?
No, not at all.
Okay. That's a good reason to send something in writing to your insurer specifically saying, please alert me to any deadlines that you intend to enforce at the 2-year or that I need to know about. Keep up your paper trail, that your letters should do all these things that are on the screen. Confirm that you're cooperating, tell them clearly what you need and why. You probably know from being on our programs that one of the many weaknesses in the disaster claim process is that the quality of adjusters, the training of adjusters varies, and adjusters come and go. And many adjusters have way more claims assigned to them than anyone could competently handle, which means to the extent that you can make their job easy by boiling things down and telling them exactly what it is that you need and want, and believe you're entitled to, without a whole lot of emotion, is a good thing to do. Meaning, instead of chapter and verse telling them all everything they've done wrong, horrible, from day one, a real short and sweet and to the point is always better. Anything to add on that, Dan or Tony?
I'll jump in. Tony always has incredible advice here because he deals with so many complaints at the Department of Insurance from folks. It's very important to be polite. It's very important to be as factual as possible, to understand that no matter how the other person is treating you, you do catch more flies with honey than vinegar. And I always advise folks, look, you want to give the carrier every opportunity nicely to do the right thing and to ask follow-up questions and to make sure you're being as cooperative as possible. And then if they still don't help you right, then that's when you need to go to another level.
Yep. Just because I may have screwed this up, we got a question from Matt in California. If you've been paid out for structure, can you go back and ask for more if there's money left, if another issue comes up with something on your property related to the structure? Tony, you want to hit that first and then Dan? If you've been paid out for structure, can you go back and ask for more if there's money left? In other words, if the full dwelling benefit hasn't been paid, if another issue comes up, can you go back to the insurer?
Yeah, Amy, I believe you can. And as long as you have coverage in place and you can document that additional amount that is necessary to rebuild what you lost, whether it's on the code upgrade side, a new bill comes in for code upgrade, or whether it's part of the extended coverage or whatever it might be, you should be eligible for that up to your policy limits.
Yep. Okay. All right. These are just reminders of things we talk about every one of our webinars. I just spent most of today at a hearing that our California department was holding about our insurer of last resort, and every consumer that came to testify, felt like they needed to tell their whole story. And I really understand that is a human instinct, is to really give people context. But in this regard, when you're trying to keep your claim moving, avoiding venting frustrations and emotions is going to get you a lot more action if you just really stick to the facts, as much as possible. And we know that's hard advice to follow, because we know that it's emotional for you. But confirming your cooperation, let me ask our two lawyers, Dan and Nelson, why is it so important that the letters that a consumer sends to their insurer confirm that they are cooperating?
Do you want to go ahead? Or do you want me?
Sure, I guess I won the race. But I'll be really quickly. It's very important because insurance companies have only limited things they can use against you for your, your participation in the claim adjustment. There's your duties after loss section in the policy. And the weapon they really have is you have the duty to cooperate. And, that's defined by law in certain circumstances, but adjusters can abuse it. Just looking at a case where somebody wanted to video record an inspection, and the carrier said, no, we're not doing the inspection anymore. We're not doing anything because you're breaching the duty to cooperate, just because they wanted to video record it. So you've got to be careful, and you want to get out ahead of that, right? And let them know that, hey, we're here to cooperate. So you should ask me if you need anything. You shouldn't make assumptions, right? Give me a chance to help you before you just throw my claim in the closed pile.
Yeah, and from my perspective, I always advise my clients that, they need to occupy the moral high ground. And the reason is because in an insurance lawsuit, when you're trying to establish that an insurance company acted in bad faith, you have to paint the picture that they're the unreasonable actor. And at every turn, they try to say, no, the policyholder, the claimant is the unreasonable one here. So every letter that is sent with respect to a claim should be written with an eye toward, am I comfortable showing this to a jury of 6 or 12 people? And just, candidly saying what the problem is, being very cooperative and trying to just get an answer goes a long way. And it's a lot easier to paint the picture of, look how reasonable the insured was versus how unreasonable the carrier was.
Yep.
So, that's the advice that I give to everyone. And regardless of the duty to cooperate, I'm actively litigating a case right now arising out of one of the recent Colorado wildfires, where the insurance company's entire defense is, the policyholder's just angry. That's their whole case, because there's nothing else to say, right? So you want to take away all of those opportunities and just be as nice as possible.
Absolutely. Okay. A couple of to-dos before the anniversary date. What we already said, continue up with your journal, get that confirmation from your insurer of what deadlines are coming up. And with regard to extensions of times, our experience has been that most insurers will extend the deadline for your ability to replace items and collect your full replacement value benefits. They're more willing to extend those kind of deadlines than they are to extend ALE, for example, benefits. They tend to be much more strict about that. Anybody disagree? Any of the panelists disagree on that? Anyone have anything? No. Okay. I think that's kind of a general rule.
I I'll say I agree to the extent where I want to point that out, because I've seen some carriers being extremely aggressive in cutting off ALE, or, pausing their payments and not making back payments, accusing folks of not being diligent. And it's, some carriers, it's a little ridiculous what I'm saying.
Yeah. And, with regard to ALE, which stands for additional living expense, some insurers use a different terminology, loss of use. Some of them will call it fair market value. Is there another term that I'm forgetting? Loss of use, additional living expense, temporary living expense.
Air rental value sometimes, Amy.
Yeah. One of the issues that, one of the problems, or one of the reasons that so many people hit walls where they run out of ALE benefits before they're able to replace, more now than in the past, was first of all, COVID. There being they're just things are different. It can be harder to find help. There are worker shortages nationwide, and builders, have trouble finding people, and there's some supply chain issues. There have been supply chain issues at Wood, and there have been supply chain issues with all kinds of things that have slowed people down. I think COVID has also made a lot of us just kind of move slower in our lives, or, just kind of, there's just, people are used to staying home and not going out as much. And, a lot of us are nervous about going out at all without, to like, and the real estate market was already pretty tight in a lot of the areas that have been affected by these 2020 fires. So there are, in many cases, there are good reasons why you haven't been able to complete rebuilding. Real good reasons. The problem is that the contracts have those deadlines in them, and insurance companies tend to be fairly strict in enforcing them. Although we'll talk a little bit more about situations where we've seen them relax them, and it's generally going to be where there are circumstances that were out of your control that really did make it impossible, and or where there are things that they did, where there was like a 4-month gap where the adjuster didn't answer any of your questions, or didn't do anything, and you were in limbo and stuck. If you're substantially underinsured, then we really recommend, there's no point in waiting past the 2 years to decide to talk to a lawyer about it and find out whether or not you might have a case that's worth bringing in court. So policy deadlines vary by company and policy form. Some are extended by operation of law, such as statutes of limitations can be, the deadline to sue. So Nelson, if somebody has a 12-month suit limitation in their Colorado insurance policy, is that enforceable?
Depends on if they're an individual homeowner or a commercial property owner. That's a distinction most people don't know. But if you're just insured under a residential policy and your home burns down, 12 months is not enforceable in Colorado. It's got to be at least 24 months. And almost every policy is that you see in Colorado now. But if you're a commercial property owner, they can include a 12-month suit limitation.
Okay. So Tony, what's the rule in California? Are we going to would anybody see a 12-month suit limitation still in their home insurance policy, a lawsuit limit that you have to file suit within 12 months from the loss?
Will be a 12-month provision in most policies for a non-declared disaster, but it will be 24 months for a declared disaster. And also based on the department's position in California law, that that period of time is extended from the time the claim is being investigated to the time the claim is closed or denied. And so it might not be 12 months or 24 months. It might be longer than that based on the time the insurance company spent investigating and processing that claim. But that's something that would have to be dealt with if it goes into litigation.
Yeah. So, Dan, I know in California, we have this concept of tolling, where the statute of limitations gets tolled while the claim is still being adjusted, and it doesn't start running until the insurer has made a final determination. Can you speak to that?
Yeah, so I would look at it like a stopwatch in your hand, not like your iPhone, an old stopwatch, right? And a referee. When the claim happens, you hit start in California. When the loss happens, you hit start. When the claim is submitted, you hit pause, and then it pauses until you have a final decision on the claim, right? And one thing to keep in mind is that you may get different final decisions as the claim goes. You may get a denial of a certain aspect of coverage, but you have another year or 2 years left of adjusting other parts. Be mindful that some carriers will absolutely argue that that 2 years will start running again for the issue they denied, but not the other issues, right? So you want to be very careful that you're not just waiting until everything's done, right? If you get any kind of adverse final decision from the carrier along the way, you have to assume you're hitting play again or hitting start again.
Right. So, I think if you've been on our programs before, we are not pro litigation or anti-litigation. We are pro policyholder. And so that means we want you to know what the lay of the land is and to make the best decision for your household that you can. And to that end, there's absolutely no reason to wait. If you're approaching the 2-year anniversary of your loss, and you feel like there are major issues that are not resolved between you and the insurance company, there's every reason to confer with a lawyer about whether, for example, if you're underinsured, and do you have a case? Because there are different rules, lawsuit rules, if you're suing an insurance company versus an agent. So let's start with Colorado. Nelson, are the rules, the deadline is different for suing an agent versus an insurer in Colorado for underinsurance?
Yes and no. I mean, they're completely different claims. So the statute of limitations is based on the type of claim you're bringing, right? So when you're suing an insurance company in Colorado, typically there are 3 claims: breach of contract, common law bad faith, and what we call statutory bad faith, which is a violation of a specific statute in Colorado that applies to insurance company conduct. And each of those arguably have different statutes of limitations. So, a breach of contract action is, generally speaking, 3 years. Bad faith claims, I tell everyone, 2 years. A statutory bad faith claim we don't even know what the statute of limitations is in Colorado, but it's at least 2 years. It's more than 1 year. We know that much based on some Colorado Supreme Court decisions. If you're suing an agent, it's generally a claim for negligence, and that's a 2-year statute of limitation in Colorado as well. What the more interesting question is, when does the stopwatch start? For all of these claims in Colorado, it's when the claimant knew or should have known that they had a claim, right? So when they knew or should have known that the insurance company breached the contract by not paying benefits. Bad faith is when the insured knew or should have known that the insurance company acted unreasonably. So it's not per se based on the date of the loss, but I always advise my clients within 2 years of the date of the loss. If there are unresolved aspects you need to, and you believe you're entitled to payment and you don't want to just walk away from it, it's time to talk to a lawyer and really sit down and think about that.
Yeah. And, one of the first place that we recommend starting to find a lawyer is on our website in the professional help, find help directory. And the reason for that is that, insurance law is a very specific area of the law. And there's lots of lawyers that do personal injury, real estate, wills and trusts. But the kind of lawyer that you want, if you are going to challenge an insurance company for the way that they have treated you, is a policyholder lawyer. And that's kind of it's not even like an official category that, you'd find, but anywhere really other than through our organization. So it's hard to find a good lawyer to know, like, who does this lawyer, this lawyer may be very confident, but do they actually speak insurance? And do they have a reputation with the insurance defense bar as somebody a force to be reckoned with? That's the kind of lawyer you want. You don't want somebody learning on the job, because insurance companies are pretty sophisticated litigators themselves. So you want to have the most potent advocate on your side if you're going to go that route. And again, just going and talking to a lawyer, calling a lawyer on the phone, that doesn't mean that you're obligated. Most of the lawyers that you'd find in our directory, they don't work hourly. They only work on contingency, most of them, which means that they're not going to take your case if they don't think that you have a shot at winning, because they're not going to get paid unless you win. That's kind of how it works. They bet on the come, as it were. They think, okay, I'm gonna bring the suit on behalf of this person. I'm not going to get paid. I'm not going to bill them. But if once I get them a settlement or some other positive financial outcome, then I get a percentage of that. And a lot of people I've talked, of course, I talked to a lot of policyholders and wildfire survivors, and a lot of people say the same thing. They don't want to. They're afraid to file a complaint with the Department of Insurance because they think that that's going to make things worse, but the insurance company is going to get mad at them. The adjuster is going to be mad at them. And, or they think that, going to a lawyer means that, they're going to be in some 5-year fight. And I often say, and actually, again, not pro, or I'm not saying, oh, right, definitely, sue. But the reality is your lawyer does most of the work. In one of these situations. It's not like, it does keep the issue live for you. And often, although most lawsuits do settle, most lawsuits do not go to trial, they generally do take some time. So, if your main goal is to put things behind you and you're willing to leave some money on the table, that's something to consider. But if you really feel like, and again, there's no harm in talking to a lawyer, because they're going to tell you honestly as they can, you have good arguments or you don't, because they're not going to, policyholder lawyers that work on contingency are not going to encourage you to file a suit if they think that your case is weak, because that's not in their financial best interest. So, okay. So some deadlines can be extended and will be. And United Policyholders offers in our sample letter library, what you'll find online in sample claim documents. And we have a sample template letter that you can modify to ask your insurer to extend all the deadlines. We've got letters asking them to extend ALE and letters asking them to extend the time for you to replace and collect full value. And we have one asking them to extend the statute of limitations. And for that one, you have a great argument, which is we would really like to continue to negotiate with you and without having to incur lawyers' fees or on either side. And, that's a great argument to use. Okay, so California deadlines that should not matter at the 2-year. You have ALE for the 2020s. You should have 36 months. Dan and Tony, can you confirm that for me? Because I always get nervous about this. A 2020, Tony, this is going to be you. 2020, they have 36 months, yes? Up to. As long as they're being reasonably diligent, right? I see you shaking your head, yes, yes.
For ALE, there's 24 months plus a 12-month extension for good cause.
Okay.
So to the degree.
So how do you establish good cause?
Well, as you spoke about earlier, Amy, it's really documenting your what's going on in the claim. If you didn't get a response for several months, document that. So when these timelines come up, and there's other delays in either getting contractors or building materials or whatever it may be, in your journal, you should have a list of all those delays that occur and what happens so that you can go back to the company when this time period comes up and make your case to them that you've exhibited good cause and therefore you're owed this additional coverage.
Right. So it's not, the 36 is not automatic. The 24 is automatic, but if you want that extra 12, I think, do they typically, it's 6 and 6, you have to, they have to give up to, it's not automatic, right? You have to say, as Tony said, you got to document in writing, this happened, that happened. I thought I had, I thought I had a contractor, but then he flaked, or, I thought I had found a house I wanted to buy, but then somebody else got it, or that kind of thing. Or, we had an illness in the family and we couldn't move forward, and that sort of thing. So, so those are deadlines that should not matter in California. The big ones, all of them actually. Colorado deadlines, well, ALE, for 2020s, check your policy, and the State Department of Insurance bulletins. Trickier in Colorado, I'm not gonna lie. We've gone many rounds in the legislature in California to try to fix this. There was a lot of pain for people who lost their homes in 2017 wildfires in California, when the law was still, I think it was, was still, I believe 24 months. And a lot of people had their ALE benefits cut off at the 2-year mark, and they fought really hard, and most people were not successful, and they just had to kind of deal with it. And I know that's hard. I know some people were able to, with circumstances, were able to get that extension. But I think a lot of people in Colorado are going to be facing the cutoff of their ALE at the 2 years. So this slide is a tiny bit, I would say, misleading. Tracy, do you reluctantly want to share some views on this?
Yeah, so the companies are just not cooperating with extensions. They're really holding a hard line. One, as a matter of fact, gave 3 months, which I think was even worse than giving nothing. So such an insult. And I think my heart goes out to the East Trellisum victims of the fire, but I also am so proud of their resiliency in reaching out to their legislator, because legislation has passed that will enhance some of these benefits. Unfortunately, they don't actually experience the benefit of that because it's not retroactive. So my heart goes out to you also, but I'm also very proud of what you've all done.
Yeah, and I think, again, you should always ask. It never hurts to ask. And you should always make the strongest ask that you can. These are the reasons why. It's not, through no fault of my own, I have not been able to replace my dwelling at this time, and I need your cooperation. And we know, and they know, but it doesn't hurt to say in your communication. This is where emotions are perfectly legit. That it's a very traumatic experience. Losing a home, it's like losing a loved one, and a lot of people don't function well for quite a while. It's a deep loss. It's a profound loss. So reminding your insurer, at the same time, asking for their cooperation. You should always, though, document what you have been doing. like I haven't just sat here feeling sorry for myself. I've done this, I've done that, I've gotten therapy, whatever it is that you have been trying to do to move forward, you should document. But you should also be realistic that it's much easier to get an extension of time to submit your contents inventory or to collect your full RCV, much easier to get insurers to extend those because they know they owe those benefits anyway. The reason it's so hard to get an extension of ALE benefits is because the insurers feel like they don't owe those benefits and you're asking them to pay money that they don't owe. Deadlines that may matter, submitting proof of your losses. Certainly if you haven't done your contents inventory at all, you should have at least started it if your insurer is if you want the full 100% and you're not going to accept that 30%. So you should at least have started it. You can ask them for help. A lot of insurers will give you, send a specialist out to help you with your contents inventory. But just sort of putting your head in the sand or trying to put it out of your mind is not going to be helpful because it's going to look like you're not cooperating. So again, it's fine to let your insurer know how painful the process is, but definitely you want to show that you're trying to do something to keep moving things forward. Okay, we talked about lawsuit deadlines, your proof of loss. They should, of course, by now know that should be done. Here's our sample letter for California asking for an extension. And you can see the language that we have here. We're continuing to do our best to document our loss and cooperate. Due to circumstances beyond our control, our rebuild completion has been delayed, et cetera, et cetera. And then we have a blank there to ask them for how long you need them to extend. And then we have a note to you, add facts that support your request. Reference official government documents that explain the delay or support your extension request. Okay. And here's a sample request for a deadline extension related to the lawsuit, deadline and or a proof of loss. But that should not be an issue for any of you at this point. We've done a couple programs for the East Troublesome folks and for the California 2020s on your right to replace by buying instead of rebuilding. California law now guarantees your right to buy a replacement dwelling. It also, Colorado law also guarantees your right, but again, not retroactively. This is an issue where I feel that even though the law is not retroactive, that just got signed, that makes it crystal clear that you can use your dwelling benefits to rebuild or buy. I feel like that's something that you can certainly, even though you're a 2020 and the law doesn't technically apply, I feel like you can say, now, as you know, the law now is clear. We ask that you honor the law regardless. Tracy, anything you want to add on that point as far as about the right to buy a replacement home in Colorado?
Yeah, so we would expect them to tender what is owed under the policy. So we have folks that are now in homes that they've purchased. So there's still some question about whether land is included and so forth, but it would be on a case by case, I think. We don't have anything in writing. The new law does. The new law that went into effect does going forward.
Yep. Okay. And also logic is on your side on this issue. They're going to pay it one way or the other. So it shouldn't matter. And I think as far as the buying. Nelson, any thoughts for Colorado people who want to exercise their right to buy a replacement home, even though they're technically, it's the laws wasn't codified, that right wasn't codified?
Yeah, I mean, the new law just makes it clear, but prior to that, I mean, I've had dozens of clients over the last 15 years who have their homes were destroyed and they bought a replacement property either in Colorado in a different location or in another state. I had a client who moved to a different country. I mean, that's always been a right that's been available to homeowners.
Yep.
Unless it's specifically prohibited by your policy. And I can tell you, I have never once seen an insurance policy that says you have to rebuild on the site.
Yep.
There's a substantial body of case law throughout the United States that says what people do with the money that is given to them is up to them. So
Yep.
even if the law wasn't in effect for the East Troublesome Creek fire, you can absolutely replace your home somewhere else.
Yep. Yep. Okay. Let's take a little deep breath. I'm going to zip through these, and again, this deck will be, it might already be, for all I know, I didn't have a chance to look up on our website, but if it's not there now, it'll be there tomorrow, and in the events page. But we've been putting these slides up now at every program. So there are statutes in California that give you rights. There are regulations in California that give you rights. The same thing is true in Colorado. And these are just, they're not always written in the most people-friendly words, but you can use them to support what you're asking for. In California, there's a very specific regulation that says that your insurer can't retaliate against you for making a complaint. Tracy, is there a similar regulation in Colorado that your insurance company cannot retaliate against you for complaining to the Department of Insurance?
There's nothing in writing, but we hold that to be true. So we take those complaints very seriously and investigate them. They're hard to prove, right? To feel like you're retaliated against. So again, I would say the documentation is critical. Be clear as to what it is. It's not just snide remarks or not return calls. So
right.
Yeah.
Okay. All right. Collecting full replacement costs. This is also California. You don't need to worry about this now, as long as you are continuing to be diligent in moving forward. This is the California law that applies to 2020 survivors. We already talked about this. 24 is automatic, another 6 and another 6, as long as you establish why you need it. But then, and again, California, ALE, you're good. This was a bulletin that the California department put out, giving people additional support for if COVID related concerns made it hard. And I think for you to get things done timely, this asks the insurers to, that's considered good cause. That's officially considered good cause for an insurer to give you an extension. Tracy, I feel like the commissioner put something similar out in Colorado. And again, it's an ask, it's not an order, right?
Right. Well, the emergency regulation went out, which is law, but it just honestly, it says if the company caused a delay, that's the big one, right? Because that lays it out. There's another section that says that the company should take into consideration any issues out of their control. So specifically for delay. So again, if you can document that there was a gap in activity from the adjuster side, they should tack that on to the end. But for the consumer pursuing it, it's a little tougher, right? They have to, it's up to the company, and ultimately they have the say.
Yep. All right, so we talked about statute of limitations. in California, and that the insurance company has the obligation to notify you. They can't play gotcha. Colorado regulations, you've got lots of good help there. At least you've got the that the insurer has to consider an estimate from a builder, and not just sit on their exactimate estimate and insist that that's the magic number, the only number. You do have the right to get up to at least 30% of your contents limit without an inventory. I know that's maybe a bit of a sore spot for you 2020s. But again, we've been saying, even though the new law doesn't technically apply, the insurer should honor that law and the spirit of that law. I mean, Nelson, do you think that's just like unrealistic, or do you feel like that it's a good faith argument?
I mean, I feel like it's a good faith argument, and it's always worth asking. And maybe I'm, a bit jaded, but the new law that went into effect, it says that it doesn't apply really until after the 2-year deadline of the Troublesome Creek fire, which is problematic and unnecessary. I didn't think it needed to be in this bill. That's not retroactive legislation. That's simply, we're just gonna not make this apply until after the East Troublesome Creek fire. And unfortunately, because of that, what I see insurance companies doing is sticking to those deadlines.
Yeah.
So that, because if they extend it out by even 2 months or 1 month, really, all of a sudden the Colorado's new law is in effect.
Yeah.
You would apply. And, historically, I had no trouble securing extensions on, recoverable depreciation, replacement of personal property, things like that. But because of the way this bill is drafted, and that it doesn't go into effect until, at the latest November, but probably more like August of this year, insurance companies are just, sticking to those deadlines. And I think it's unfortunate. And I think it's going to force a lot of people to file a lawsuit. That probably could have been resolved, right? Most of these get resolved before even.
I'd say a couple of things. So it's easier to get a company to extend if it's in the policy. It's the extra contractual stuff, right? So I agree with you. I think it's easier to get an extension for recoverable depreciation for your contents, because that's in the policy. And then if they extend it for one, they're setting a precedence. So they have to be also very careful in what they're doing, because they need to be consistent across all claims.
Right. I mean, and that's why we often see that when people get an extension, we're not going to usually hear about it, because if it happens, it's going to have been confidential behind closed doors, and they tell the policyholder that if you blab this all over, well, they don't use the word blab, but if they say, if you violate this non-disclosure, you're gonna, you have to give the money back, or what, that kind of thing. So because insurers they don't want to set a precedent, but so there's lots of things that happen that we don't know about. I mean, there were at the 2-year anniversary of the North Bay, of the wine country, of the fires in California, there were protests. There was a lot of media work that was done. Survivors got together and really made a lot of noise. And I do, to try to get extensions of additional living expense benefits. And I think, and the department did everything they could, but it was very tough. And I don't think a lot of people ultimately got extensions. However, there are some things in Colorado that might give you some leverage to get extensions. So for example, your agent and your insurer were supposed to have offered you at least 20% of an extended replacement cost rider. They were supposed to have offered you up to 24 months of ALE. They were supposed to have offered you at least 10% for code upgrades for law and ordinance. Nelson, are you seeing situations where people did not, where they weren't offered and those things, and where you feel like you've got enough meat to go on to help somebody establish that because they weren't offered those extended benefits, that they deserve a remedy? Or is that just so hard to prove?
It's not hard to prove when it exists.
Right.
The bigger problem in Colorado is that, it's a good thing, right? Most insurance companies just changed their policies after this law went into effect in 2013 and just included these coverages. There is a major carrier in Colorado that did not do that.
Mm-hmm.
To my knowledge, Allstate did not do that. And instead, at renewal, in really, really, really small print, it said, you also, you can also get this other coverage. I don't think it complied at all with the Division of Insurance regulation concerning the offer of this. Like, it had to explain the cost, what the coverage was.
Mm-hmm.
But, that's just my personal belief. But for the most part, most people already have this coverage, and it's not really a leverage point. I think it's just a matter of being really nice and saying, look, I've been doing my best to meet all of these deadlines, and here's when I couldn't do anything while you were delaying. So, just give me a little bit more time. That goes a long way in a lawsuit. It goes a long way prior to a lawsuit.
Yeah.
Again, an insurance company that says no to a reasonable request, that doesn't look good.
Right. Okay, we're going to try to go a little faster here because we've got some questions that got submitted, and I want to make sure we get to those. So we are going to wrap up at 6:30. Okay, so a reminder again, an exactment estimate is not the last word in Colorado in terms of the reasonable cost of replacing your dwelling. These are the duties that your insurer has in Colorado to process your claim in a timely manner. All of these are available on our website. All right. We're also going to zoom through these, as we've already talked about these, documenting and being a good communicator, keeping a good record of your contacts, establishing that you've been reasonable, you've been cooperative. And these are some of the examples of arguments you can offer as to why you haven't been able to replace your home. Difficulty finding professionals, cost increases due to increased demand, housing market issues, COVID-19, delays that the insurance company caused. Those are some of the most, if you have examples, I gave them my estimate and they didn't sat on it, for months and months and months. That's one of the best arguments you can make if it's true and you have evidence it's true to get an extension. There was something that the insurance company's personnel did, things that they did that made it, that made things drag out. Okay, so on ALE, you know how to figure out how much you have. We've talked a lot about this, so we're going to get to Kevin. You're finally going to get a chance to talk. Kevin, thank you so much. What are we looking at here?
That is my replacement home, courtesy of my ALE. That's my motor home, or the motor home I used to have. I actually am in a brand new one I just picked up last week. And yeah, my story is that, I came up with a solution for some unique circumstances that post-fire. Actually, even before the fire, my stepbrother had just gotten a Class A motorhome. And I thought it was great. And I thought, I'd like to get one of these someday. And that was about 3 months before the fire, the Calwood fire in October of 2020. And I had been looking at them and pricing them and been on some of the RV trader websites and so forth and said, someday I'll get one. Well, the fire changed all that. And as I was driving away from the fire, my wheels were still smoking from being on fire themselves because the rubber burned off my wheels. And I was driving down the hill. I said to myself, if that darn house is gone, I'm gonna do everything I can to get an RV and make that my housing until I can rebuild. So right away when I met with my adjuster at the still smoldering skeleton of my house, I told him my plan, and he said, "Well, I can pitch it to him, and it never hurts to ask." So then the follow up to that came. Well, I pitched it to him, and they didn't say no. So it was kind of like the Dumber and Dumber movie, like, "Oh, so you're saying I got a chance?" So that's kind of the way it was. And I felt to structure it and make it compelling to them, I think I had to satisfy certain criteria. And one of which was, I think, with ALE, you're entitled for them to provide a similar style and size, square footage wise home, based on your ALE allotment. And that put me in a certain category for monthly expense. And I, basically implored that there wasn't a comparable house. We have a housing crunch here, as many places do, and there wasn't really anything available. I showed that I, had looked, and there was nothing in my comp category. Also, I have two clinics. I'm a physician. I'm a dermatologist, and I have two clinics that are about 45 minutes apart. And I was conveniently situated between both clinics, so I could get to either one very quickly. And that wasn't an option too, based on housing availability. I have pets that are at home, and sometimes I need to get home and take care of a pet or two or something like that. So those are the things I kind of pitched, that I couldn't get to work. There was no comps available, and and so what I had to do to make this work was I wanted to structure it as if I was leasing a replacement home. So I went to the RV company, and it turns out, one of the pitfalls to some people might be a lot of the RV companies won't construct a lease as a private individual. They only do commercial leases. So fortunately, I own a business. So I said, well, why don't I get a commercial lease to my business? And then I did a sublease to myself as a sublessor to the motorhome from that. And surprisingly, not only did they not say no, they agreed. And so I set it up as, structured it as my monthly allotment for my ALE, which I expected to last 24 months. So I divided my total ALE divided by 24 months. So it put me in the $7,000 to $8,000 a month category for replacement dwelling. And that's exactly what the lease came out to be. So I structured the lease at that. And then I thought I was going to have to submit receipts each month to show that I was making payments on the sublease. And to my astonishment, they wrote me out a check for the entire policy limit of my ALE, which if they would have done in the first place, I would have just bought the darn thing.
Right.
But so that worked out just fine. So it's worked out to be a wonderful thing, because I actually, some of the things you have to consider if you take this mode is where you're going to park the darn thing. And then if you don't have that worked out, you might have to rent a space in an RV park, which could be additional expense and that kind of thing. Some people might, my initial impression was I wanted to be back up at my home site as soon as possible. So I thought once the building gets underway, I want to actually live up there while the house is being built. Yep. Well, that might be an HOA issue with your HOA or even city and county codes as well. So it turned out I have two clinics with empty parking lots that we also own. And I just installed RV hookups at both places. And now actually I live in my clinic parking lots. And this is one of the clinics in the picture, and the parking lot's on the other side. And I have an RV 50 amp plug, and I just plug in there, and I get out of bed in the morning and work out and go to work. It's like 10 steps into the back door. I'm at work every morning. First one in, and the other clinic is set up a similar way. But those are some of the things you have to think of in terms of, if you have to have a place to park, you want to have power, you want to have a water source, you need to manage your sewage output by either going to a dump station or other arrangements and that kind of thing. And, so that's some of the issues with that I managed to work out.
Kevin, can
Well-
I just want to jump in real quick to share something very similar. We have a client who lost a second home in a wildfire and they had a good amount of ALE coverage there.
Mhm.
And the carrier only wanted to reimburse the insured if they would book another cabin, for a couple days. And that
Yeah.
was not comparable to owning a second home. So we did the same thing. They bought an RV and then they would take the RV up, they'd park on the land there as they were rebuilding. And that's how they used their ALE money.
Wonderful.
Yes, and I want to give thank you so much, Kevin and Dan, for that. And I want to give a shout out to an attorney by the name of Natasha O'Flaherty, who those of you who were affected by East Troublesome probably have heard of, because she lives out there in Granby, and I know she's worked with a lot of you. And we, because she's had a number of clients who've done creative ALE solutions, I had her record a little info piece with me that you can watch on our website on creative solutions for ALE, similar to what Dan and Kevin have gone through. So you just go on our website, uphelp.org, type in the search box, creative ALE, that'll get you right there. You can also find it in your library, a link from your library. Okay, Nick in California asks, our rental home was damaged in a wildfire. The landlord's asking us to vacate while repairs are going on. We can't answer the question about whether the landlord can force you out. That's a real estate question, and we can't. If so, will that terminate our ALE claim? I'm going to just say absolutely not. It has nothing to do with your ALE claim. You still need to have a place to live. So if anything, you're just going to have to find another place, and subject to the policy limits, your insurer is going to have to cover that. Okay, we relocated to a different state. State Farm is paying for a rental house. Our 13th, oh my gosh, our 13th adjuster now says they're denying mileage, saying because you relocated, we're not going to pay for mileage. Their mileage that they're incurring looking for a replacement home. Does moving out of state affect mileage ALE? We believe we would not have incurred costs for driving to pursue buying a home if not for the fire. Let's see. Can't really tell what state this person is in, but it doesn't really matter. Who on our panel is up for throwing an answer at this? Looks like Tracy's unmuted, so I'm hitting you first.
Yeah, I worked with a lovely couple, and they built a house in Wyoming on a plot of land that they had. And they made many trips back to Colorado, and those were all denied because the ALE is for expenses that you incurred, and they, because of the fire, because of being out of your home. But they considered that just within the state, right? So if you have to drive an extra 5 miles to get to work, or if you have to drive, an extra 10 miles for something that you usually do, we pushed it as far as we could push it. But then after regulators push it so far, it goes to an attorney. So I'm pretty sure they're represented, but it was tough on them to understand. And we tried to make the case that, but for the fire, they wouldn't have had to do that.
Right. Any California people have anything you want to add on this question? Dan or Tony?
The way I'm looking at the question, it says there's incurred mileage costs to pursue buying a home. And so just to point on that, ALE is typically going to be defined as necessary increased cost to maintain your standard of living. And so I don't think the mileage to, look at new homes should be included, but it would be an interesting argument under dwelling coverage. It would be one of those ones you say creative and maybe ask it, but I don't know if the answer is going to be what you want.
Yep. Okay. This is a tax question. We don't have any CPAs here, but what I want to recommend, Alice in Colorado, is that you go on our website, you watch one of the webinars that we did. We did one with both a Colorado license, 2 Colorado licensed CPAs that talks all about tax considerations for wildfire survivors in Colorado. And if you don't get an answer from watching it, John Trapani, who was one of the instructors in that, is incredibly generous with answering questions, and you're welcome to try to shoot him an email and ask him that question. Alice also asks, how does the insurance company determine the land value of the replacement property when you buy instead of rebuild? We have offered arguments. I think we even had a slide earlier in the deck, logic about why it's not appropriate to take a land value deduction. The main one, because when the insurance company determines, it's going to be arbitrary, right? Setting, unless the realtor has broken out, which they typically don't. When they give you a spec sheet for a new home, they don't say the dwelling value is this and the land is that. They just say this is how much this house is going to cost. So whatever the insurance company calculates, it's going to be subjective and arbitrary. The logic is they didn't insure land in the first place, so it's not relevant at all. But the real argument is if you take the cost of the original home that you had, including the land, so the cost to replace that home, let's say it's $500,000 to rebuild the home that you had, has nothing to do with the land under it, right? 500K, if that's the example, then you should have 500,000 available to you to buy a house. So as long as you find a house that costs around 500,000, it should be irrelevant, because, and if the insurer says, well, then you're getting unjustly enriched because then you're going to have two lots, you say, no, I'm not, because this house replacing my old house for 500,000 means that house plus the land was actually more valuable than a house that costs 500,000, including the land. So it's just logic in that situation.
I recently had that issue with one of my clients, and the insurance company was saying, oh, your replacement cost value, the land is worth, such and such amount. And I said, where on earth does that come from?
Yeah.
They couldn't tell me, and they kept insisting on it. And I said, all right, well, we'll give this one more shot. Why don't you point me to the place in the policy that says you can take a deduction for the land value of the land?
Right.
I couldn't do that either. And then finally, I was able to secure a purchase contract that just, the land was included with it. Certainly like every home in a subdivision, there is no separate land cost, right? Like it's just, there may be a $5,000 like lot premium or something like that, but the land is wrapped up into the building cost. And if you do run into issues, I would pay a realtor. You probably don't even have to pay them, but pay them a couple $100s and say, what is the value of this land without a home on it? And I've had some success with that too. The other thing is this argument is actually to the benefit of insureds. If the insurance company says, oh, your house that burned down was worth $500,000 and your replacement is worth $500,000 as well, but that we're not going to pay for the land value, then you can go back and say, fine, let me know what I can spend. Because potentially you could get a $700,000 house and argue that, oh, I'll just pay for the land. And, the structure is worth $500,000 alone. So it's to the insurance company's benefit to just pay out rather than have the insured go back and get a more expensive, a bigger house, essentially, to use up all the replacement cost benefit.
Yes. Okay, so Tony, I was kind of hoping you could answer this one. Let's see. How can I get the adjuster to give me an itemized statement so I know where things stand? We've asked but not been successful.
Amy, in California, if you've been switched 3 or more times, the insurance company is required to give you a summary of your entire claim, and that entire And that summary should include all the payments they made to date and how those payments are allocated to each of the buckets of coverage that you have. And so that certainly is an obligation in California. And if you're not getting that, which is really the basic information you should be getting from your adjuster, please contact us at the Department of Insurance and we can get that for you.
Yeah. And um, and we will have a slide later that gives the information on how to get file a complaint or request for assistance with Tony's agency. This is a classic question. How do we get paid when our adjuster's blowing us off, basically? And that's why we're doing the program tonight, because at this point, you know, your loss being 2 years, almost 2 years in the rearview mirror, you shouldn't be encountering delays, and because there are regulations that really very clearly require insurers to respond timely. And if they're not, you know, you file a complaint with the Department of Insurance, and if that doesn't fix the problem, then it's time to confer with a lawyer. And again, if it's, you know, a lawyer is they're going to look for if there's a pattern, you know, like if there's been chronic delays and chronic ignoring you, and sometimes you just filing a complaint can help shake things loose and get things moving. Shirley in California asked, do we get extended coverage if we don't rebuild, including code upgrade coverage? We need every dollar. Why are they asking for the code upgrades for the house we're buying? So I think I'm going to give you the very short answer from my perspective. And if Dan or Tony have anything to add, please do jump in. So the whole, it doesn't matter what's in the house that you want to buy. What matters is what code upgrades would have been required if you rebuilt the home you had. And therefore, what would the cost of those have been? What would that have added to the cost of the project? And then whatever those costs were, whatever it would have cost to upgrade the plumbing or electrical or what have you, then that, if you have that coverage in your policy, that gets added to your dwelling coverage. And that's the available bucket that you have to purchase. But so whatever it hasn't, the house you want to buy is irrelevant whether it has code upgrades or not. It all has to do with, would there have been upgrades required if you had rebuilt? How much would they have cost? Did you have the coverage for that? If so, those funds should be available to you toward the purchase. Dan, anything you want to add or disagree with?
That was a great response. I would just add, if you buy a new place, you may be able to use some coverages in making changes to a new place in addition. So if that's your situation, you might want to investigate that more.
Okay, so and then Glenn in California, we haven't done our inventory yet. We're being asked to ballpark, just not ready for that. Tony, do you want to give a response on to this question? Sort of not really a question, it's more like just an observation.
Amy, and you mentioned it early on that if you have time limits coming up for your contents, you need to at least show that you're moving forward with it and you're cooperating and starting to document what's going, you know, what your inventory is. So if you're coming up on those time limits, you do risk an insurance company at the end of and saying you've missed your time limit, and then you have to then defend that. So you're better off at least starting it, or at least getting the minimal amount first if you haven't already got that, that you should be getting without an inventory, and at least get that advance payment first. But then either hire a public adjuster that can help you with the contents just for the contents portion of your loss. If you think that they may be able to do it, and you'll have to pay them a fee for it, but it'll be just for the contents portion of your claim, not for the rebuild portion. Those are some of the things you can consider.
Okay, thank you. Glenn also asks, we've discovered some problems with the windows, where the seals are compromised. What's the deadline to file for these later discovered damages? You know, I think, you know, your insurance company has a continuing duty in California of good faith. Even after if there's a lawsuit filed, they still have a continuing duty to handle your claim in good faith, which means if you have notified them of the situation with the windows, I would definitely get a contractor to come out and give you an estimate on repairing that situation. And then I wouldn't even wait for that. I would let the insurance company know right away. And as far as the deadline to file, I wouldn't even worry about that until you get an answer one way or the other from the insurance company. Does anyone have a disagreement about that?
I would just add, unrelated to the specific question, but you should get an engineer instead of a contractor, because it's more of an engineering issue, and there are, you know, similar materials of somewhat similar consistency that can experience damage when there's radiant heat. These may be between the siding and the wall layer underneath the siding of the external area. It could be in your roof. So because you've seen a sign of it, it's probably not the only place it's happening, and an engineer is going to do that investigation. And then a contractor can price the work afterwards. That would be my recommendation.
Okay. Great. So we've gotten through almost all the questions. I was just in the in answering hang on, one question that was asked, and I think we are almost there, which is great. So please don't ask any more questions. I'm joking. We will try to answer them if they do come in. So just a few things, just around the anniversaries. You know, this is now what many people refer to as your new normal. You know, your loss and the recovery process is now a major part of your life. We recommend that you not shy away from seeking professional help at this time. It can make a big difference. This is not the time to tough it out if you're suffering from depression or anxiety. You know, as I said earlier, it's really, losing a home is really similar to losing a loved one. It's very, it's deep dislocation and disorientation. Some people deal with it better than others, and however you're dealing with it is your way, and that's fine. But the goal is to incorporate this into your life and your family's legacy and make a new normal for yourself and your family. And, you know, if you can, you celebrate along the way by making new memories, by celebrating victories along the way. Fire families have had groundbreaking parties, framing or stud parties where people write on each other's walls during the rebuild, you know, positive messages of hope that live in those walls. Some people have created art from materials they salvaged from the debris. And, you know, we really understand and you know, that none of this is cookie cutter. We try to give you a spectrum of support and guidance. These are some of the events we've got coming up. Our Survivor to Survivor forums. We have one coming up on Tuesday where you can go and hang out online with people who may be having similar challenges to what you're having, and they may have some ideas, and they may be able to bring you some lighthearted guidance. Then if you are looking to rebuild a house that would be less likely to burn, we will be having a Q&A on next Thursday to follow up on an educational program we had last week. All these programs you can watch at your convenience from links on our website or on YouTube. And then we will be doing another program on buying a replacement home without leaving money on the table. If you did not get your questions answered, and I know we have a few questions in the chat that we are not going to be able to get to tonight, you can use our Ask an Expert forum to ask those questions. We will have a record of the questions that got asked that we didn't get to tonight. You know, I'm not the tech person, so if there's a way to figure out who you are, which I think there is, we will do our best to answer. But if you did not get an answer to your question tonight, I suggest that you use our Ask an Expert forum and type that question in. Here's the website for the California Department of Insurance. Here's the website for the Colorado Division of Insurance. I want to thank our funders so much for the financial support that makes it possible for us to offer programs like this and for us to be able to keep partnerships with state departments of insurance that is just so valuable to you in terms of having a friend in a government agency, and then our attorney volunteers tonight, and our survivor volunteer tonight. Many people are rooting for you, and everybody who was on tonight's program are among them. So I want to thank again our panel. You guys and gal and guys have been great. Really, we got through a lot of really good information tonight. You'll be able to see the slide deck from a link in the event section of our website for tonight's event. And I want to wish all of you a safe summer, a restful evening, and hope that we've given you some comfort tonight and some good ideas. Kevin, particularly you, thank you for your good energy, and all of you. So with that, we're gonna log off tonight and wish you a pleasant rest of your evening. Thank you so much, everybody.
Bye. Good evening.
Thank you.